That Alibaba's a bit of a tough one for me. Look, there's a lot there that's genuinely impressive. Okay, I had a real world business in China before I started Muddy Waters, and I can tell you how difficult it is to scale a business anywhere, but especially China. And so Ma Yun has done an amazing job building that company. That's on one hand. On the other hand, you have political risks, and I know sometimes, people in the U.S. will say, yeah, I'm a little worried about Baba, it's so big and powerful. I wonder, if that's sensitive in China. I don't know. It very well could become sensitive. I don't know how to handicap that risk. And then on the other hand, yeah, there's an element of Baba that's too good to be true. And so if my father asked me for my advice, I guess I would just say, look, talk to somebody else. I don't have an opinion.
Is there any Chinese companies right now listed here in the U.S. Raise your eyebrows? You think you want to do a research on them?
There are companies, when we look in their filings, we'll see yellow flags or red flags, and that we'll think to ourselves, these companies are probably frauds. But the issue for us is that the bar. Okay, so if you're sitting around watching us talk about a given company that we've started researching, the bar for us to say this is a problematic company, let's say that bar is here. We're all skeptical people in my firm. We've been doing this for years. But the bar to convince the long shareholders to sell is much higher bar. Yeah. So the question that we have to ask is whether we think that within our resource budget, we can meet that bar. That's a different question. So yeah, we'll see these companies that are suspicious, but a lot of them we just say, I don't know how we would prove it to the satisfaction of the shareholders.
Recently, you published an article on U.S. market is more likely to default. So can you maybe elaborate more on that idea?
Sure. So I'm sure most of your viewers are aware that right now the politics in the U.S. are not exactly smooth.
The Trump rally.
Yeah. Well, yeah. We had the Trump rally. But the thing is, what nobody's talking about in the U.S. is that we have hit what we call the debt ceiling. Yeah. And so the U.S. government is not able to issue net new debt above this level. And so Treasury only has so much cash on hand. And that money, without our ability to borrow, which we already passed the debt ceiling middle of March, without the ability to borrow new money, so in order to borrow more, Congress has to raise the debt ceiling. And in the past 5 years, we've had that situation twice. And it's gone down to the wire. It's been very close in the past to where the Treasury ran out of money and was not able to make interest and principal payments on the debt. Fortunately, in the past, enough people from both parties came together and they raised the debt ceiling. But what's interesting here is that a lot of people assume that because the one party now controls the White House and each of the two houses of Congress, a lot of people assume that it won't be a problem to raise the debt ceiling. Sure. But I think it will be a problem because within the Republican Party, you have these factions that are very divided. And there's a faction in the Republican Party called the Tea Party. And the Tea Party, these are the people who were the ones who greatly resisted raising the debt ceiling in the past. I mean, their view is that they want to starve the federal government of revenue in order to force it to get smaller. Yeah. And so they really could end up, so my base case scenario is that the U.S. will not default. I think enough cooler heads will prevail and will avoid a default. But I think we get closer to a default than we have in the past, and a default is a real risk because if the Tea Party people cannot, if enough of them don't change their minds about not raising the debt ceiling, I don't think the Democrats are going to help the rest of the Republicans raise the debt ceiling. I think the Democrats would rather watch the Republicans commit political suicide than help them out.
And a lot of people think that we are now in a very dangerous late bull market. A lot of stocks are boosted by unnaturally cheap money. So does that mean an easier environment for you to have a short idea?
Yeah, I mean, so probably the number of bad companies that are out there is the same as it's always been. But the difference is you've got more bad companies with real market caps now than you used to have. So from a short seller's perspective, that's a positive. But on the other hand, with the market just constantly going up, it's actually pretty frustrating. And people seem to have forgotten about volatility. And the thing that amazes me the most is when you look at the implied volatility of the market, it's so low despite all of these massive geopolitical tremors, if not earthquakes, that we're having. So, and from a short seller's perspective, I guess if you don't think, I mean, volatility has to pick up in order for some of these short theses to play out. Because otherwise, if everybody is really complacent and the market just keeps doing this, a lot of the stocks that should fall won't fall.
The return is pretty good, like 16%. So is this much more or less than Muddy Water Research?
So for legal reasons, I can't comment on performance. You might have been referring to the flagship fund that we launched on August 1st of last year. And so that had less than half a year of performance. But we were very happy with the performance of that and our day one fund as well. So yeah, in terms of, is it similar to the returns that we produced before? Yeah, somewhat. I mean, obviously in the first 1 to 2 years of my business, we used more options because we had less money, and you could make 200% a year. So can't compare, can't compare to those periods. But generally, I like to put up about, this was pre-managing money on my own money. I would try to put up about 30% a year. That would be a decent year.
And you took like $100 million money from outside, and you say you will never take more than $500 million. Why is that?
Well, for what we do as short activists, it's very limited capacity, and even 500 is, I think, too high for what we do. So I don't know what the limit is. The other thing that we can do, if we come across a trade that's particularly that has a lot of capacity, we can always take in more money for purposes of that trade. But I think day in and day out, probably don't want to be too far above $200 million. That's my feeling at this point.
I look at the research saying that assets under hedge fund that is targeted on short companies is only like $5.5 billion. That's relatively very small. So is the circle very small? Do you all know each other and talk?
I think a lot of us know each other. It is a very small and shrinking universe of short sellers. I mean, talking, occasionally. I mean, I sit in San Francisco, so most funds are here in New York. London has a lot. I don't speak or socialize that much with fund managers and analysts who are based in London and New York. So, but yeah, just like anything else, I mean, people within the industry, they talk to each other. I mean, at varying amounts.
What do you enjoy right now? For example, in the past, you said that you enjoy investigate into a company, you enjoy the field work, and now you don't do that. And here, the hedge fund society is here in New York and London, but you are not here. So, what's the most enjoyable time in your life like?
Heavy is the head that wears the crown. I now have a bigger business, and I do a lot of what I call principling. It's not a real word, but it's my version of saying that I have to act as principal. So running a business that is now bigger, especially regulated business, there's a lot of time I spend on legal. There's a lot of time I spend on just talking to vendors or potential strategic partners, marketing. So there's a lot that I do these days that's not directly involved in the research. And the problem, I really like doing the research, and I also like a lot of what I do as a principal as well. It's just the biggest problem I have is that it's two different speeds of thinking. Your brain runs at two different speeds. So if I'm marketing, or I'm talking to a potential client, or if I'm doing an interview with you, my brain is running at somewhat of a faster speed. But to do research, really close the door and just read through a bunch of filings from earliest to latest, that requires a lot of uninterrupted time where your brain can move very slowly and you pay attention to details. And I get sometimes a couple hundred emails a day. I mean, it's very difficult to do these things now. So it's like any other business that's evolved. I become a little bit less in the operations and more of a manager.
Thank you so much, Carson.
Thank you.
Thank you. So is this like a pre-war period in your office? Because we know that you have several Hong Kong reports at hand. Is it like pre-war period for your office?
Well, I mean, I wouldn't say that we're really, really buckled down getting ready to go to war. I mean, we're not looking just at Hong Kong listed companies. We look at companies in Europe, we look at companies in the US. A lot of these end up being nasty confrontations. It's pretty predictable what happens. We come out on a company and explain our thesis and why we're short. Company will, I mean, I could almost write the response in my sleep, where they say that, such and such, Muddy Waters Capital are short sellers, they stand to profit if the stock goes down. The report contains misleading statements, exaggerations, and falsehoods. We are considering taking legal action. So they automatically, these campaigns, they get pretty nasty regardless of where in the world they are. And I've been doing it 7 years. People who are with me, most of us have been at it together for a number of years. So it's not like it was in the beginning where there's a huge knot in your stomach and you're really getting ready as though you're going into combat. It's we're more calm about it than in the early days.
As you said that you have a lot of blowback from the companies you targeted at. So because they are very, some people say that the time is on the bull side. So if there's enough time and the investor is not sure about targets, they usually bet on the probabilities. So if the time is long, maybe the short seller will lose. What do you think?
Well, I mean, so look, when we've analyzed our long-term track record, the vast majority of cases, the stock goes down over the long term versus staying flat or going up. I mean, we are probably over the long term, 65 to 70% go down. Now, and that's as good a ratio as anybody in investing has, especially when you consider that we're doing it on the short side, where again the markets are built to go up. But if we say it's 65% are wins and 35% are not wins, one thing is true, at the outset, I have no idea which is more likely to be 65% name or a 35% name. I wish I knew, and if I knew, then of course we wouldn't do the 35% names. But yeah, it's what we try to do as activist short sellers. We just try to knock over a bunch of dominoes and create enough pressure on the company that the dominoes keep falling and we get a win over the long term.
For those Hong Kong stocks, the Hong Kong market volume is not that great, and sometimes there is a manipulation maybe behind the company. So what's your strategy under these circumstances?
Yeah, if we think something's manipulated, that's a little bit of a tough one in terms of coming up with a strategy. I mean, we really have to think about whether it makes sense. And we could pull up charts of a bunch of companies in Hong Kong where the stocks have done this, and I mean we're pretty certain those are manipulations. With Huishan, we didn't get it as right as we wanted in terms of since we viewed it as a manipulated stock, or we felt it was highly likely that Huishan was manipulated. I mean, we were really hoping that we could break that manipulation a lot sooner. But it held out for about 3 months. So we don't have a strategy per se. We just try to be selective, understand where the sources of capital for the manipulation are likely coming, how much selling. So one thing that's important when we look at potentially manipulated stock is if there are not a lot of real shareholders, by this I would mean active shareholders, who could read our report and then change their mind about owning the stock and sell, then it's very difficult to see how you break a manipulation. You need what we call natural sellers in order to do that. So that's really the heart of our analysis when we look at those companies.
So for those Hong Kong companies, you do investigation into whether they have relationship with like potential buyout firms or large investors?
Well, if it's an obvious manipulation and fraud, that's not so important. But we want to understand who owns the stock, like who really owns it. Well, I guess when I say who really owns it, what I mean outside of the manipulation group, who owns it, what are their motivations for owning it. And one of the problems is that you have a lot of these index funds that own these things. And this is where really the manipulation schemes in Hong Kong have become really such a problem, is that the idea is that if they can manipulate the market caps up to $1 billion or more, then these stocks get added to an index, and then Income Vanguard, Income BlackRock, and some of the other index funds, and they buy it. And so as the manipulators, what they're doing, they're making money by selling to the index funds. And so, but at that point, if you just have a bunch of passive holders of the stock, I mean, the people at BlackRock might believe that they own a fraud, but it doesn't really matter to them because it's in an index. So if we see a name like that that's manipulated, and the long holders are basically the manipulators, some retail, and then just index funds, that's not really interesting for us.
For those Hong Kong stocks, too many acquisitions and mergers is a red flag. And maybe they trying to raise too much capital is another issue. What else is on your radar?
Well, so yeah, M&A, but also a lot of CapEx spending. With it, I mean, look, sometimes businesses are legitimately spending a lot of money on CapEx, but that's something that we have to look at. What are they buying? How much are they spending on it? Do they really have, do they have real needs for additional capacity? I mean, that's something that we'll see when maybe a company claims it's at or near capacity and that's why it's expanding, but sometimes we'll look around, talk to plant employees or people who know plant employees, and we'll find out that no, the factory is nowhere near capacity right now. And so then that automatically calls into question why they're spending money on CapEx, and then really what are they getting for that CapEx spend. So that's one thing that we look at. Too good to be true, in other words, margin outperformance. We look at that a lot. Sure, there are definitely some businesses that can consistently sustain margins above those of their peers, but that's actually pretty rare. So when we see that situation, it definitely merits taking a closer look.
Is there any other pattern, like, for example, 6 or 7 years ago, when you are target on those Chinese companies listed in the US, you are like get listed through reverse takeover. But what about Hong Kong companies? Do they have any pattern?
Well, there are patterns, but it's not something that we've taken a really close look at. And when I say that there are patterns in Hong Kong, there are networks of cross ownership. So you'll see the same people behind some of these companies, or you'll see some of the same entities that invest in these companies. So there are a lot of networks in Hong Kong that do these manipulations and these frauds. And if you follow them, or if you identify some of the players, you just kind of follow those players around and you'll see companies that are problematic. One example of that was a company that we wrote on in 2014 called Superb Summit, Qifeng. So Qifeng has not traded since we wrote on it in 2014, but that's one where there are just people behind it. We saw that they were in all of these pump and dump scams in the past where the stock price would be ramped and then it would crash. And yeah, I mean, that's what they do. Like, that's one of their lines of business, these people, is stock manipulation and fraud. So if you follow them around, every now and then you'll come across one that's big enough to actually short or think about shorting. So that's how to play that in Hong Kong.
What's the bar like in Hong Kong? People say that unless a company is fabricating like well over 50% of their revenues, the investor doesn't care at all.
Yeah, I mean, so doing what moves the needle for investors? What do they care about? I'd say it's case by case. The more of a blue sky story a company has, then really the more profound you need the fraud to be. But if it's a company that doesn't really have a lot of expectations, it doesn't necessarily have to be that profound or that large amount of fraud. And it also goes back to to when I was talking about who owns it and why do they own it. So if you have a large, I mean, for us when we're looking at Hong Kong, what we want to see is we want to see foreign institutional owners other than index funds, because those are people who know us. They're people who can read the reports and provide and have a more sophisticated understanding of what we're saying than most retail does. So a situation like that, even if it's not 50% fraud on the top line, might very well move the needle for those types of investors. It's really case by case.
You got a lot of feedback from the companies, so it's like competition pretty going head to head. It's pretty fierce. What's the office like during the wartime?
Well, yeah, it's interesting because in the very early days, the way that the analogy, the description of what we did that I used a lot was, it really is like combat, and somebody has to go down, either the company or I do. Because in the early days, it didn't have a reputation, people didn't know me, and so so I think a lot of investors, to them it was binary. Either Carson Block's a fraud, or Orient Paper's a fraud, or Rhino's a fraud. So, I had to win those fights convincingly in order to get where I am now. I mean, now we do things that are more complex, so harder to prove that the company has problems. The opponents are much more sophisticated. They have a lot more resources to fight back. Almost every time we publish on a company, first thing they do is they pick up the phone because there's a crisis communications firm, or really probably 10 of them, calling them and saying, hey, we have the playbook on how to respond to this. So we choose much tougher opponents than we used to, and those opponents are more sophisticated. So as I said, we win 65–70% of the time over the long run. We don't win 30 to 35% of the time. If that had been the case in the early days, I couldn't have gotten here. Now, yes, from a reputational perspective, we can take the occasional loss, and I don't think it's a big problem for our reputation. I mean, when you do what we do, there are always critics out there, and so and these critics, a lot of them actually really hate us because they'd owned some stock in the past where we did get a big win, and so the moment we come out with a new thesis, they'll bring up things that didn't work, on the chat boards or on Seeking Alpha or Xueqiu or what have you. So that's just a fact of life, and you can't, in my business, you can't really let that get to you. You just have to understand that you cannot win 100% of the time over a sustained period.
What kind of response do you like to see on the company side? Like if they are buying back their shares, is that an aha moment for you?
Well, it's one of those things that makes me, that makes me kind of chuckle now, because when a company says, okay, our response to a short seller saying that we're a fraud or, that our business has serious problems, our response is to buy back more stock. When you think about it, okay, and a lot of investors initially cheer that, and they say yes, and then they'll buy the stock as well. But when you step back and think about it, all right, if the short seller is correct, if this company, is a flawed company, and the stock should not be selling here, it should be selling here. Well, for the company to be buying shares here is actually taking what is a bad situation and making it even worse. So I think that investors have this programmed response to, at least in the short run, they love the idea of buybacks. But over the medium term, I think the implications set in for them that, oh wow, the company just used a bunch of cash and the stock is still falling, and man, that really doesn't seem like it was such a good idea.
Mm-hmm. Many investors praise you for your research ability. You have stated many times publicly how you research into a company. Is there any secret that you haven't been told? How do you stand out from other, like short sellers or even local companies who know the industry or know the local situation better?
Well, I mean, there are a few things that I think got Muddy Waters where we are. For one thing, we are very, what I call, multidisciplinary. Mm-hmm. So most investment research is produced by people who are investment people, and maybe they just have MBAs in finance. I don't want only that. Okay? We have accounting. We have one or more accounting analysts, or we have had one or more accounting analysts. We have lawyers who work with us on research. We have business operation experts who work on the research. So by bringing all of these different perspectives to bear, I think we understand businesses far better than most investment analysts do. So that's one thing that differentiates us. Something else is obviously our ability to communicate it. I'm a pretty decent writer, and one thing that's always been important to me, especially when I've written on Chinese companies or something else that's pretty complex for the average investor, is it's really important for me to simplify and explain and educate the reader, because they have to have the background. So if you can think back to when the first few reports that I wrote on Chinese companies that were listed in the U.S. investors did not know what Gongshangju was. So I had to explain, okay, SAIC, Gongshangju, this is what it is. These are the type of records that they keep. This is how you access them, and this is what we've learned from them. So there was a lot of education involved. And so one of the things that I've done in writing that I think has made us successful is I try to provide readers with the background that they'll need to understand the information that we're presenting.
Mm-hmm. And you hire people to help you, like consultants to help you work on a project. How to prevent them from profit from this case illegally?
Yeah, sure. So a lot of times when we engage consultants or law firms, we don't let them know that we're Muddy Waters. So I own some other entities, and we'll use one of those entities to engage them, and we'll tell them that we're just a generic hedge fund or maybe a family investment office. So that's one way, is to keep them from knowing who we really are. Other times we do have to open up to our vendors, and if we do, we just make very clear to them that you're not permitted to in any way trade on this, to talk to anybody about what we're doing, and if we're working on a project and we're getting ready to release a report, and we see trading there that looks to us like somebody is front-running us, then we will not release the report. So if you go and buy a bunch of put options or short a bunch of stock, you're probably going to lose money, because we're not going to release that report until we're convinced that nobody is front-running us.
Mm-hmm. You once joked with your wife saying that a death threat is kind of a performance indicator for you. Do you really get those kind of death threats?
Yeah, I mean, I used to get a lot of those email death threats, some of which were pretty explicit. Well, one that that I remember from after I wrote Rhino, which was our second report, was, I'm going to put a bullet in the brains of your father, your wife, and whoever wrote this used their real first names, and then you. And so, I thought that was a little bit nasty. But yeah, the thing is, when you get these threats, at least when I got these threats, I wasn't so much worried about the people who sent me those threats, because I figure if you're going to kill somebody, probably the dumbest thing that you can do is to warn them. But I'm more worried about the people who have those thoughts and were not sending me the emails.